Welcome back to our channel. Today, we're diving into some significant moves by one of the most renowned investors of all time, Warren Buffett. Is he signaling concerns about the U.S. economy? Warren Buffett, the CEO of Berkshire Hathaway, is making headlines by selling stocks and increasing cash reserves. This has raised eyebrows and questions about his outlook on the stock market and the economy. The big news from Berkshire's second quarter financial report was a substantial 50% reduction in its Apple stake, down to about 400 million shares. Alongside this, Berkshire's cash reserves hit a record $277 billion as of June 30th, up $88 billion from March 31's. This move has many wondering if Buffett is losing confidence in the stock market. Most of the increase in cash came from selling Apple stock, which now represents about 30% of Berkshire's market value of over $900 billion. Interestingly, Berkshire repurchased only $345 million of its stock in the second quarter, a sharp drop from $2.6 billion in the first quarter. This brings up the question, does Buffett think Berkshire shares, which have outperformed the S&P 500 this year, are fully valued? Berkshire's Class A stock, which ended Friday at $641,435, is up about 17% this year, surpassing the S&P 500's 13% return. However, the stock fell 3% to $621,963 in Monday morning trading, with Class B stock also down about 3.2%. Jim Shanahan, an Edward Jones analyst, expresses concern, saying, "Warren Buffett is a sophisticated investor with a solid long-term record, and he is reporting some massive sales that have continued into the third quarter." Shanahan highlights Buffett's recent sale of about $3.8 billion in Bank of America stock in July, marking 12 consecutive trading days of unloading starting July 17. Shanahan adds, "Buffett's actions make me concerned about his outlook for the markets and economy. It's incredible how much the cash has grown." Berkshire's diverse operations give Buffett a unique insight into the U.S. economy, and his recent moves come amid weakening economic indicators. In total, Berkshire sold $77 billion of stocks in the second quarter, reducing its equity portfolio to $285 billion. It only bought $1.6 billion in stocks during this period. For the first half of the year, Berkshire sold $97 billion in stocks and bought just $4.3 billion, according to its recent 10Q report. Despite the significant stock sales, Berkshire's operating profits rose 15% to a record $11.6 billion in the second quarter, driven by strong insurance operations and higher investment income. However, profits were lower in its railroad, utility, and other businesses. Shanahan speculates that Berkshire might sell its remaining Apple stake by year-end. On the other hand, Wedbush analyst Daniel Ives cautions against overreacting, noting that Berkshire still holds a top position in Apple. Buffett is a core believer in Apple, and we do not view this as a smoke signal for bad news ahead, Ives wrote. Apple's stock fell 4.8% in early Monday trading amid a global tech sell-off. The big question now is, what will Buffett do with all that cash? While a regular or special dividend is possible, Buffett has previously rejected the idea. He continues to seek a major acquisition, though that has been elusive. He might simply sit on the cash, enjoying yields on treasury bills, riding out market and economic storms, and waiting for potential opportunities. What are your thoughts on Buffett's recent moves? Let us know in the comments below. Don't forget to like, subscribe, and hit the bell icon for more updates and analysis on the latest financial news. Thanks for watching.